Welcome back again with another video from Crypto Astrology, where we pray to the crypto sun, moon, and the stars, or otherwise known as the Solana, Luna, and the Stellar, to navigate these crypto markets and these wild, wild west seas. All right. I'd just like to say welcome again. We're going to be doing a little bit of a news update and also some technical analysis drawn from those news updates. So let's begin. We'll get into the news right now. So I've picked out a few of the key stories that I think will impact will have a big impact on the price of the crypto market and how it performs over the coming days and possibly weeks. So first we have a story from Goldman Sachs about its changing narrative on DeFi. So DeFi is short for decentralized finance, and pretty much decentralized finance does go against a lot of the traditional finance sort of purposes. So the point about decentralized finance is that it's not controlled by a single centralized authority like traditional finances are. And if you have a look at this chart, it pretty much just demonstrates the value of decentralized finance projects or decentralized finance coins increasing quite exponentially over the last 4 years. And I just want to highlight that this is just a changing narrative from a few years back when decentralized finance was so small, and now these traditional companies are taking notice. So that's a good long-term sort of view for decentralized finance, is that it will probably continue to sort of increase in value and take over a larger position of sort of finance in general. Next is the Ethereum Altair upgrade. So this is just another step towards Ethereum 2.0. So as you know, Ethereum is undergoing a massive upgrade from proof of work to proof of stake, and this is just part of that. I just wanted you to take note that this is following the London hard fork from EIP 1559, and we can take a look at how this affected the price from the London hard fork and sort of speculate on how it will affect the price of Ethereum coming following this update on Wednesday, October 27th. So that's a key date to look out for, and pretty much it just affects how miners are being paid on the lead up to Ethereum 2.0. Okay, and so next is the hotly mentioned Polkadot Parachain auctions, and that is still slated to begin on November 11th. So that'll probably be quite good for how Polkadot is viewed in terms of price action. And if we look at what these parachains are supposed to be doing, pretty much they're supposed to increase interoperability between blockchains. So helps I guess be a bridge between different cryptocurrencies. I'm not too familiar with the individual the individual technicals of it, but when I do figure it out, I will let you know. And I don't think that's quite important for what we need to do to analyze price action. I feel like this is these are just bullish news, just to be aware of, and you don't really need to know the underlying factors, but essentially this is an upgrade to the existing Polkadot network. And another key date on November 11th. Now, it doesn't necessarily have to come to fruition at November 11th, but any delays or things like that should be noted, and I will let you know as soon as possible. Bitcoin price prediction model remains amazingly accurate. So this is just a headline based on the stock to flow model created by Plan B. So this model is probably one of the most famous long-term models for predicting the price of a Bitcoin, which is related to its stock to flow. So what is stock to flow? So pretty much a stock to flow is hinged on the assumption that price is related to scarcity. Right, so if you ever attended a commerce class in high school, they'll teach you about supply and demand, and how that affects a price, right? If you have a low supply and a high demand, the price increases. If you have a high supply and a low demand, well then price should be low, right? And this is the same thing, and this has been used to analyze other sort of limited resources like gold and silver and like commodities before, and now he's just applying this to Bitcoin. So because we have an inbuilt scarcity of 21 million coins, and it's sort of, and we have like a defined flow, which is the mining rate, which is halved at every halving event. We sort of have a very nice mathematical model to analyze the price. So as you can see, it's been quite accurate. If you look at sort of his analysis for the end of each month, so August end of the month was 47k, September 43k, October 63k. So we're approaching the end of October right now, which is why I'm bringing this up. And if we shuffle over to the price action and look at it on the monthly time frame, you can sort of see how well this prediction has been holding together. So let's look at the end of this month, or end of last month. So that was 44k, and we can look at September, 43k. Well, that's pretty good. And right now we're right under his prediction of 63k at 61k. So when I look at this, I'm just wondering, like, how would you trade this? Well, the primary reason is that this is sort of a good predictive way to look at where we will be at the end of the month, and he's been accurate so far, so there's no reason to really doubt that he won't be correct again. When it gets to the end of the year with prices above this, then we'll have to see. But for now, I think it's quite reasonable to assume that he will be correct, and if anything, this would be a nice buying opportunity right here for the long term. Okay, so now let's look at some of the news and see how that has affected the price in the past. Because what's the point of looking at the news if you don't know how it's going to affect the price? Okay, I'd like to bring you back to this day. So if you look at this day, I'll draw a line here for you. So I'm looking at, so this day was the Ethereum London fork update that I mentioned before in the news article. This is the day that it was announced, and if you look at it, we did dip below the previous day, but what it led to was actually a substantial increase in price based off that Ethereum upgrade. If you go on the hour by hour for that day, you can see that line. We'll go on hour by hour, and pretty much that was the hour that the Ethereum upgrade was released. And if you look at it, if you look really closely, what happened was price actually decreased up to that update, and on the hour of the update it decreased even further, and then it started increasing. So maybe you should be expecting a dip when we do get that upgrade on the 27th of this month, which is in about 3 days. So we can expect, so if we decide to plot out the 27th, let's change the time frame to New York, because as we all know, New York is, the Americans have all the money in the world. So 27th at 9 o'clock, let's put a line there. Excellent. So for all you Australians out there, let's change the time back. That is about midnight, pretty much midnight on the 28th of October. So if we have a look, let's get rid of this. So we can expect price to sort of flounder around until this point, and then in which case we will probably see some sort of upside action. And that would look good for Plan B's model for the end of the month of a $63,000 Bitcoin minimum price bar. So I do look forward to that day, and I do think that Plan B's prediction will likely be correct. Okay, so let's take a step back and look at some of our long-term charts that we cover each and every week, and the purpose of these long-term charts is just to predict possibly where the top and the bottom of the market cycle is. And so this is an important chart for any person who holds Bitcoin for the long term, because if you think about it, you definitely want to sell at some point and you definitely want to buy at some point. It's just how will you sell and how will you buy. This chart is pretty good for predicting the general region of when you want to sell and the general region of when you want to buy. That's why we cover these charts, because if you don't sell, well then, if you look at the past 3 cycles, right? So we have one here, so one here at 2011, one here at 2014, one here at 2017, and one here maybe 2021 or 2022. You'll notice that we actually have a drawdown of about 80 to 90% in terms of price. So are you really going to let 80 to 90% of your investment go down? I don't think so. So I definitely think you should definitely sell at some point, and you should definitely buy at some point. And hopefully you'll catch that 80 to 90% move, or the majority of it, or at least the majority of it, right? So that's why we look at these charts. As you can see now, well, this is the logarithmic growth curve. So the price is measured logarithmically, so it increases by a factor of 10 every unit on the y-axis. And as you can see, we're above the midline here, and that generally the midline has been some pretty strong resistance. So we might actually expect a test of that midline. So we might come down to 55, and in that case, that'll be a very, 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 very good buying opportunity. And if you're not buying or setting a limit order around there, then you're crazy, because from there, that's probably a low point on the middle of the cycle, and then from there we'll probably see price increase really, 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 really quickly. Okay, this is just another visual representation of the price action and a hodl wave here. So this hodl wave is designed to show us when it's decreasing to its lowest point is pretty much the top for Bitcoin. As you can see, we've gone down, but we're not sort of at any of these levels. We're about 40%. We're still over 50%. So I still think that's generally long-term good. The 200-week moving average heat map is basically the low of the bottom of the market cycle. We're nowhere near that at this point, and we're still continuing to a top of the cycle. So that's not going to be coming into play anytime soon. Next is the Bitcoin search results for the past 12 months, and we don't have nearly as high results as the middle of the year and last year as well. Next is the MRVZ score. If you go into the red band, that's sell for the top cycle, and then the green band is the bottom of the cycle. We're nowhere near the red band right now, so there's nothing to worry about right now. The pi cycle top indicator, so this is statistically been accurate for all of the previous cycle tops to 3 days. And well, if you look at it now, the bottom side of this pi cycle indicator is actually increasing. This moving average is increasing, and it's got a positive slope. Now this moving average is a long-term moving average, which generally means that it takes a long amount of time for it to decide to go up or down. And once it decides to go up or down, it generally continues with that trend for a while. So we probably will see a continuation upwards of this trend line until it meets the green line again, which is very, very good bias for a continuance to another peak of this cycle. So once we do start seeing these two lines getting closer together, I will let you know that this is probably a good time to start getting ready to start selling. Next is we'll skip that. Next is the pure multiple. So the pure multiple is statistically pretty good at determining when to buy. As you can see, these dips have been really good buy opportunities for the bottom of the cycle, and these tops it is on a decreasing slope, but we are nowhere near above the previous top here, so I don't think we're quite close to the top of the cycle just yet. If you also look at the fear and greed index, this is pretty good analysis for when to buy. Generally, if it's around 15, you definitely want to buy, but we've experienced quite a strong pump in this fear and greed index up to 79. and recently we've had a pullback, so it's down to 73, but I don't think it's anything to be concerned about just yet. Maybe once we pop back into extreme greed, probably values of over 90, that'll be time for some caution. Okay, let's look at the actual price action again, and we can look at different charts that we have going on. So this is just a moving average and RSI. So moving averages are just averages of the previous price action. I'm using EMAs because I found EMAs to work better than simple moving averages in terms of more volatile markets, and these have been statistically quite good for discovering when areas of support. So as you can see, the yellow 21 exponential moving average has been pretty good support, and then if we go below that, the 55 exponential moving average has been pretty good support as well, and then below that, the 200 exponential moving average has been very good support and resistance as well. I like to draw your attention to the RSI. So the daily RSI, which is the time period we are on, has been pretty good for determining long-term trends. So as you can see, this is a long-term downtrend that we had, and once we've broken above it, we've seen a long-term uptrend continue, and that's been pretty good for determining a general trend for a lot of swing trades as well. As you can see, another long-term trend. So this period was about a period of a month, and then we saw a massive increase as well up to here. What we've noticed is we generally do test these support lines again, and that's probably that's a really good buying opportunity for these support lines. So it's good to keep in mind how these trends go on the RSI. Additionally, the RSI is also very good for some bullish and bearish divergences. So as you can see, we have a bottom here and a higher low here. Not really any divergence right there, or about the tops. So that's higher, 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 higher. So not really any divergence there either. What about here? If we go on a longer term time frame, do we see any divergence? So we have a higher weekly and a lower, well, yeah, so I guess it is lower. So higher weekly, lower weekly. So we do see some divergence here, and we do see like quite a big wick. And this is what is known as a sort of a hammer, or like an inverted hammer. It generally signals a reversal on a long-term time frame. So if we do see price action closing below, I guess, the bottom of this wick, which is 64,683, so about 55 K on Bitcoin, probably will see price go down and touch this yellow moving average at 47 or 48, but I don't think that will exactly happen based off Plan B's prediction. So while this does generally signal further downside continuation, I don't think that will be the case this time. If you do see on other time frames, on the daily and other longer time frames like the 3-day, we also do have that movement as well, and the 5-day as well. So it does look pretty bad if you just are looking at the candles. But if we do look at some other divergences, I do feel that if we do make a lower low on this RSI, it'd be a very good buying opportunity, and probably get some bullish divergence off that lower low. Just probably bouncing off one of these moving averages, likely the green 43 at 43k, or the yellow at 50k. So yeah, let's look at the small time frames. So we do see on small time frames we could experience quite a nice little bounce here. I think best case scenario is that we do see some sideways action until next week, and then pop back up next week, and do have this sort of little bear trap going on right here. In addition, we did break out of this longer sort of downtrend on the RSI, pop back above that, and as you can see, is very good for price when we do, and then we do a retest, also very good as well, and we did pop back above that as well, and now currently we are at the retest. So in any case, this is a make or break moment. If we do pop below this, pretty bad, probably go down to 55 or 58k region, and but if we do hold this, that'd probably be another good buying opportunity. And all in all, this has been pretty accurate for support and resistance, and I probably would stick to a buying opportunity at this moment, currently, right now. If we wanted to extend this analysis, we can go on the hourly, and as you can see on the hourly, we did have that little descending triangle here that we did pop back above. And right now, if we do get a little retest, I think that'll be another time to buy, as long as we don't dip below sort of the 59k region. If we do go below the 59k region, probably we'll see continuation to 58 or maybe even 55. But on Ethereum, it's another story. So Ethereum has been coming above this descending channel on RSI, and has been looking pretty good for price action. In addition, it's bounced off the 4-hour support zone over here, and right off the 55 EMA and the 4-hour. So that does look very, very good for continuation. Probably a little test of the 55 again at 40k, and then probably further continuation there. If we do pop back above sort of this closure, this closure at 41.57 on a 4-hour, and then probably retests of previous all-time highs following that. So it does look quite good. Be aware, it is the weekend. We do experience quite a few wicks on the weekend, more than during the weekday. If you look at longer term time frames, it does look very, very good. No signals on the EMA candle close, which has been statistically proven over the history of Bitcoin's lifespan to outperform buying and holding. Look at further at some more moving averages. Nothing on the MFI signal right here. We are coming down quite significantly for this this consolidation. So probably a short-term top over here, but likely support here, or either support at 55 being very, very strong. And if I do see a bottoming signal on this MFI indicator, I will let you know. Yeah, so that does look very, very good. I think that just about wraps it up for this week's analysis. I'll bring it back to the RSI. So probably do see a short-term pullback on the 1 hour, probably back down to this RSI support line, and probably brings it back down to around 4k for Ethereum and just under 60k for Bitcoin. But probably that's a buying opportunity unless we do fall below 58k, in which case that's probably another support zone in any case. But yeah, I do think that Plan B's 63k analysis by the end of the month will hold, based off previous performance. So I'd just like to thank you again for watching the this little update, and I hope your week for the week ahead is very good, and hope you do take care of yourself and enjoy the gains that will be coming towards you for this market. Yeah, so thanks again, and I'll see you next time.